This meeting is being recorded.
All right, folks are starting to roll on. And I'll give it one more minute so that we're truly at the top of the hour so that we don't cut folks off. And then we'll do quick intros on my part, Amy, and your part, and then Carla will take it over from there.
That's good.
I know a lot of folks that are coming on this call. We have a lot of Oregon folks. It's all over, Carla, but it's definitely heavier in Oregon. We're pretty heavily networked in Oregon, so when the word goes out, it really goes out here. But we definitely have gotten a little bit. We've got folks from Idaho, Montana. I do believe we have at least a few Wyoming folks, and we have a fairly large amount of Colorado folks as well, and Washington.
Well, excited to get to chat with all of them, answer all their questions too.
All right, it's 10 o'clock, so I'm going to go ahead and start it, and folks will roll on as they roll on. Feel free to camera or not camera as you choose. If you are speaking, please do, if you can, turn on your camera. I know some folks are located in places where internet is screwy, or you're located in a space that is pretty busy in the background. Do what you need to do. I'm Sydney DeLuna. I coordinate the Oregon Food Hub Network. I have met some of you along the way. I also hold a role with the Northwest Rocky Mountain Regional Food Business Center, and I am the co-lead of what we are calling the Right Size Investment and Infrastructure Team, along with Amy Mateus, who will introduce herself shortly. We will be recording. We will be capturing notes. We will have a transcript, and you will be able to see the chat after this. So there will be lots of ways to catch up on any information that you have missed. I will also include links to the Northwest Rocky Mountain Regional Food Business Center and all helpful links that come up along the way. So do not panic. You will not miss anything. You will not lose anything. Amy, over to you.
Yeah, thanks, Sydney. Hi, everyone. Amy Mateus here. I, aside from being a co-lead with Sydney at the Northwest Rocky Mountain Regional Food Business Center, Right Size Investment and Infrastructure theme team, it took me a long time to get that to roll off my tongue. I'm also the executive director of a nonprofit in Central Idaho named the Sun Valley Institute for Resilience, and we're focused on transforming our regional food system to build regional resilience through the economy, the environment, and our communities. And we run a small impact investment fund where we take philanthropic capital and deploy it to entrepreneurs in the Southern Idaho food shed. So I'm really passionate about helping small, mid-size, new, innovative businesses do what they want to do and make their dreams come to fruition. And I realized over my time of in this role that finance is not always people's expertise. It's not always people's exciting place where they're working, but it's so necessary to have thriving businesses. So I'm excited to have someone like Carla, who is an expert in this field, provide some support to our cohort of folks on the call today and the people that will watch the recording afterwards. So thank you. And I will now go on mute and be talking in the chat to people.
Great. Well, thanks so much for having me. I am so honored to be here today, sharing some of our expertise so we can help businesses thrive and have more of the impact that they want to see. And that doesn't happen by accident. We have to craft businesses intentionally from a financial perspective in order for that to be the case. So let me start by sharing my slides. So let me know when you can see that. And I'm going to see if I can, I think I'm going to get some help with the chat. So okay, it looks like it's up. Wonderful. So Thank you, everyone that's here live, and for those of you watching the replay, I'm going to go through some of the basic knowledge that a lot of business owners don't get access to when they're starting their business or even after they've been established in business around financial management. A lot of you are probably familiar with bookkeeping and accounting. And then there's the third leg of the stool, which is the finance side, which is the forward-looking, the proactive planning, the financial management of the company's numbers and profitability that you want to be aware of and proactively managing throughout your time in business, because that's what gets you the capital and the access to potential opportunities, because you'll have the profit to be able to do that. So we'll dive into just the foundation of all of this. Just know there's a lot more to be learned, and I'll try my best to answer all the questions you have throughout the presentation. Make sure you're dropping those in the chat. We have someone monitoring that, so we'll make sure to get to your real life questions here today. Take advantage of the time we have together. And I'll start just with a brief intro. So I'm Carla Titus. I'm the founder and CEO of Wealth and Worth Within. We are a fractional CFO firm that's chief financial officer that manages and does consulting and advisory services for several businesses across the US. We work 100% remote, and we have a team of finance experts from CFOs to controllers to analysts that can help support a finance function in a business as a consultant and objective third party that comes and partners with the owners to make financial decisions and help them provide data and insights around what is happening financially in their business and how to best navigate those decisions that you're trying to make. We love helping our clients grow their profits, make sure that they have cash in the bank, and that they're paying themselves well, because we know business is hard, and we want to make sure that you're compensated for the risk you took in starting your business, and that you don't become resentful of it because you never got anything out of it, which is what I see often. And you'll be surprised the size of businesses we work with that owners are still not paying themselves. And that is a critical component of the things we do for businesses to ensure that they can also build, wealth well beyond an exit or for their own, benefit long term. So that's what we focus on. And we've been in business for about 6 years, and we're very passionate about finance. So you'll hear a lot about that today. To get started, I want to make sure that we ground ourselves on some of the basic terminology and foundational aspects of financial management. And that starts with understanding your financial statements. So there's 3 of them. We have the profit and loss, which is the one you probably are the most familiar with. P&L, short for profit and loss. It's also called the income statement. These are all the same terminology, by the way, but that's what makes finance sometimes confusing, because folks don't realize that that all means the same. So I want to make sure we walk you through some of those terms so that they don't become confusing down the road. And then additionally, you'll have 2 more statements, which is your balance sheet. That's where we capture all the assets, liabilities, equity in the company, and ultimately your statement of cash flow, where we'll talk more about cash flow management a little bit later in the presentation. But those are the 3 financial statements that when you're going to the bank to get access to capital, or you're applying for any kind of loans, you'll be asked for some of those statements, and having an up-to-date and current is going to be critical. Now, I want to break down the profit and loss statement a little bit further, because I find that there's components here that we should be looking at on a month-to-month basis to manage the business financial health. And this is where we want to carve out some time and be very intentional about reviewing our numbers. And if you're not already doing this, by the way, a lot of business owners don't do this. So don't, or if you haven't, now we can get started with that habit and make sure that you're spending a little bit of time reviewing your numbers and understanding what's actually happening in the business. So we'll start with the top line, which is always referenced to as the revenue, sales, or income that you bring into the business. So this is the money you're generating through sales. Depending on what type of product or goods that you're selling, that would be, different types of revenue streams, meaning categories or ways that you generate money. And it's important to understand how you generate money, because not every way that you do it behaves the same. And some might be recurring monthly, some might be a one-time sale that you have to do every single time in order to generate sales. And so understanding how those ways of generating money behave, it's going to give you a better idea of when you can expect sales to show up in your business. And I know you had some of that marketing class yesterday. So like putting some of those strategies in place to see how you can grow your sales and tracking that over time is going to be important for you to know. Are we growing? Are we shrinking? Are we generating more sales from one product line versus another? And then that starts to give you more data to make better decisions around where should we invest more money? Where do we want to grow? And you start to use some of that data to decide where you want to focus your attention. The other thing I see often is the growth rate of different revenue streams or ways that you generate income might vary. Some might grow really quickly, some might take a lot more work to grow them. And understanding that timeline is going to be important because you might have expectations of maybe doubling your business year over year. But if your revenue stream does not move that fast, or it requires a hefty investment on equipment or product and packaging or materials in order to do that, then you might grow at a different rate than you expected. We can set growth rates year over year, and we do encourage people that they think about, especially now, start to think about next year. What do we want to achieve? How much do we want to grow by? Also, what did we do this year to date? Like how much sales, how much revenue came into the company? And then is that growing month over month? Is that growing quarter over quarter? Start to think about some of the trends and see, where your company is going from a revenue perspective, and start to give you some insight into what's working well and what you can do more of. Then we move on to the cost of goods sold, which is essentially anything that's required to be able to produce that product that you are either manufacturing or growing. And that could be some, materials, ingredients, costs, or packaging, shipping, and direct labor. What I often see missing from cost of goods sold is this direct labor piece, where is the required people time and pay that goes into producing that product or farming that product, and making sure that you understand what is that time and payroll cost that goes along with it. Maybe even tracking the time start to finish on the process that you have to be able to develop so many units. It's going to start to give you some insight into, is there a way to streamline the process? Are we spending too much time on it? What could we improve in that process to minimize the time? Or is there a piece of equipment that we need to invest in to reduce the time by half? And now we're talking about a capital investment that can help you reduce your overall cost of goods in the company. Now, the way we want to calculate cost of goods services and kind of the subcategories here is look at a function of cost of goods sold, which is gross margins. The way we calculate gross margins is we take revenue minus cost of goods sold, and then that number gets divided by revenue. And it's a function, it's a percentage. And we can measure that over time to see, are we improving in our gross margin? Is our gross margin going down over time because we have more costs? Are we spending too much in cost of goods sold compared to what we're producing in revenue? So that percentage starts to give you some insight into how healthy are you running your company from just a pure covering your cost to produce the sale that you're trying to make. We can look at it overall. We can look at it by revenue stream if you can parse out your cost by type of product that you're selling, and kind of thinking about it over time. What is the trend telling you? Is it going up? Is it going down? And then we can start to take actions to manage some of the costs down if needed. And coming up with ideas like I mentioned, the equipment maybe to reduce cost, or maybe it's a different type of labor you want to switch to, maybe changing the process altogether to batch some of the work to make it more efficient. So that's where we start to think about, okay, do we need to improve on it? Or do we have a healthy gross margin in our business? And ultimately, this gets determined by, how much room do we have for profit at the end? So I'll go through that here in a minute. Now, off to the right, we have expenses, and this is what we often talk about. We call overhead. I know people use this word a lot, but what does it actually mean? This is anything that is required for you to run the business that does not directly impact your revenue generation. So think about if you have an assistant, if you have an operations manager, if you have any kind of admin costs like, rent, utilities, marketing, software, you hire a coach, anything that is not related or directly impacting revenue, it's going to be this overhead bucket or operating expenses for the business. This is still required to run the business, but you can try to, manage that cost and minimize it, or have the investment be right size in the allocation for that. Often I see people sign up for very expensive fixed costs like rent and utilities, or maybe it's around loan and equipment that they've purchased and they're making payments every month on that. And no matter if you didn't make any sales a month, you still have to pay those bills. And so I see that often we're over allocated in those fixed costs. So before we even get started with a month, you're already $4,000 in the hole because you have rent to pay. But your first $4,000 in sales is going to go to cover your rent. And we're not even talking about the taxes on that $4,000 that you made, right? So kind of thinking about as you are making investment decisions and allocating overhead, what is the right and necessary allocated expense that you need and must have in order to run the business. And over time, you're able to grow that as the business grows because you'll have more room for some of those costs, but just trying to keep it tight and only to the necessary things when you're just getting started. Okay, so after you've covered all of that, you've generated your revenue, you cover your direct labor, materials, packaging costs, and anything that goes into cost of goods sold, and you've paid your expenses. Now what you're left with is your profit. And ideally you have a profit, not a loss. I know a lot of businesses, when they're starting, they might be losing money every month. And the goal is to have a path or a plan on how do you shift to break even and ultimately profit. And this does not happen overnight. It takes time, to devise a plan and put it into action and take the right steps. Sometimes the business is operating at the right levels from a cost perspective, but now we need to generate more sales. And so sometimes the focus is not cutting back. Sometimes the focus is growing the top line so you have more room to cover some of the expenses. How do you do that? Well, you got to figure out what is your marketing plan? How are you going to get your products sold? How do you get another wholesale account on your books? How do you win another client that is ordering product from you? And that's where we're kind of increasing the room for all this cost to fit in. And then ideally, you're not also growing the cost at the same rate, maybe cost of goods sold, because, that's necessary to produce the product and good and service. And then making sure that you're tracking what is that profit percentage every month. So profit divided by revenue, what is that percentage that you're seeing as a function of revenue? And we want to see that percentage grow over time. At some point that will stabilize and will not grow any further because you can only run a business at a certain profitability. There's kind of a ceiling sometimes on if you look at benchmarks around types of businesses and what kind of industry you're in, that it's just the reality of running that type of business and industry, that there is a ceiling on how much profit you can make. But the good news is, as a percentage, there's a ceiling, but as your top line revenue grows, that percentage will be the same, but it will be a much higher number because the absolute number at the top is much larger. So as you grow your business, to 500,000, a million, 5 million, 50 million, your percentage of profit might still be 10 or 15%, but now your number calculation is much nicer as a result of that revenue being larger. Okay, I'm going to stop there for a second and just make sure if there's any questions or anything that you've heard of that you maybe want me to address, or if you've looked at your numbers and you feel lost, or maybe you haven't looked at your numbers and you're not sure what's going on. Is there any questions around any of that I can answer?
I have a question.
Carla, I would love to ask a question if I could around the direct labor when we're thinking about farm businesses.
Mhm.
Does direct labor include like going to the farmer's market or delivering products to a restaurant, or is it just for producing the produce or feeding livestock? Like what kind of stuff is captured in direct labor versus that overhead labor?
Yeah, great question. So I'll address all three. So yes, on the farm labor directly touching the product and doing the work, that payroll cost for those farmers definitely wants to be allocated as direct labor. You mentioned farmers market. So the time that it takes your people to go there and you paying them for the time at the farmers market might be a marketing expense, or it might be a direct labor cost if they're selling product and generating sales, right? So it depends on the function. Like if we're just there to set up a booth but not really sell any product, that's a different kind of expense than if we're there with product on our table and we are exchanging money for product. That is direct labor cost, including the booth fee that you're going to pay to establish your table. So there will be a category under cost of goods sold where we'll track booth vendor fees, and we want to make sure that those fees are accounted for there. We want to make sure we're accounting for any travel time. Maybe you're paying your people to travel, or gas reimbursement or mileage. Like we want to make sure that that's included. And in this, if maybe you're shipping product to the place and you have shipping costs incurred because of that, again, that's because this is what's going to produce sales for you in that situation. So you want to make sure you're tracking some of those costs. It's directly impacting the sales that you're generating. And then I missed one. It's like farmers market,
like driving and delivering to wholesale customers, like bringing it to restaurants, grocery stores, etc.
So that's shipping, right? So or shipping or delivery, dash delivery. And so it might be you have a van that you are having someone drive the product to the wholesale to deliver that product, and you're getting paid that invoice right after that. That act of shipping, delivering, it's included in direct cost, because without the delivery, you could not have collected on the money or made that sale. So that's how we kind of make the differentiation. So that delivery to just like go talk to someone to maybe make a sale happen, it's more like a marketing expense versus like you're physically delivering products so you can collect that sale and make that sale happen.
Great. And I think we have some questions popping up in the chat from.
Yeah. And then we have some raised hands. So where do you want to go? I'm happy to. I saw Hillary unmute, so I'm going to let her go, and then we'll go to the chat and then we'll come back. Go ahead, Hillary.
Hi, thanks. So I work at a restaurant and we are in Seattle. And I guess my question is a little bit about the percentage, like the labor as a percentage of sales, like this number as like the minimum wage increases, that seems like that as a percentage of sale is constantly going up.
Yeah.
And so I feel like we've talked to many people who are like, well, you want to get a 35% labor. But it seems like that is constantly a moving number.
Yeah.
Based on what the minimum wage is, because.
Absolutely.
So I'm just curious to hear from your perspective.
Yeah.
Nationally, sort of what you're seeing as this trend.
Yeah. So I know that people are going to throw a lot of benchmarks at you, say like, well, optimally you should be at this percentage, right? But the reality in business is that things outside of our control impact some of those numbers. And I think we need to be very honest and like account for that. And so when you see minimum wages rising, then my question to you from a CFO perspective is, what can we do about some of this cost? Your options are, you could look at hours worked and decide, is there different shifts and less hours available that the restaurant can be open, days that we operate, because you can get away from paying the minimum wage, right? Like legally you have to comply as a business, like there's no way around that. So then the question is, what's in our control and what can we adjust? And it could be hours worked, it could be number of people we hire, maybe we keep it a more streamlined core team, and maybe times of year where the restaurant is not as busy, we want to adjust down the number of people we have, if that's an option. And we maybe hire some contracted people versus employing people. And so there's things you can do to try to get to those benchmarks. But at the end of the day, the reality is the minimum wage went up, your cost went up, and now you have to manage to find the savings somewhere else or in that same category. So then I'll be assessing what other categories can we get some savings from to offset this rising cost in this category, because we know that maybe we're already running really lean and we don't have a way to do any more than we can on the labor bucket. So let's go look at other buckets. Can you buy packaging at a discount rate because now you order quarterly instead of monthly, and you got a price break on your packaging for, supplies or things that you buy for the restaurant? So you start to kind of play with like, where else can I get the savings? Because if you don't get it from labor, then you have to get it from somewhere else to offset that. Did that help?
Yeah, it's a lot of stuff that we kind of are already considering. So like, it's good to know that we're on the right track.
Yes.
But yeah, I find it a very difficult target sometimes.
Listen, and you might be at a different allocation. You might be 37%, but your other cost of goods sold might be lower than other restaurants. So you also have to think about it, holistically. And then ultimately, what's the profit you're trying to get to, right? Are you going to get it out of the operating expense bucket, or are you going to get it out of the cost of goods sold that impacts directly, your sales? That's a decision you get to make. And I always want to make sure we're focusing on, the right things, and making sure that you are profitable enough to stay open and continue to operate, because you already run a slim margins as a restaurant anyway. So okay, let's go to the chat. Thank you for that question, Allison. So marketing, the produce already harvested, regardless of if it's going to market or not. Would this be a labor category, not cost of goods sold? Allison, are you with us? Are you able to give me a little bit more context on? Oh yeah, hi.
Yeah, hi. I wrote that in response to another question about the
Oh,
farmer's
okay.
market. And I was just thinking in my head of like, so if it's already harvested, so the cost of goods, if it's harvested, that's all the labor to get it out and get it on the boat. But once it's on the boat, it's like, I don't know if that the labor with the market and the ship, I understand like the delivery time and all that could be shipping, but expenses for the market booth, and then labor on day of, which is usually just show up at the market, or often show up at the market and work there. Is that,
Yep.
Would you roll that into cost of goods?
Yeah, because you're showing up there to generate sales, right? And your people being at the booth is the time for them to generate. Even if they didn't generate sales, the intention is to generate sales.
Yeah.
So you want to capture that labor cost in your cost of goods sold, because that is one of those revenue streams we talked about, right? Farmers market sales is a revenue stream. And then your cost of goods to deliver on that revenue stream will be your people being there, the time it takes them to get there, the time, it took them to harvest the product. That's even like before, right? On direct labor costs for producing that product. So yes, you want to capture all of that if you're not already capturing that. And maybe you're running it through payroll already. So it's just about, where you allocate it, instead of just lumping payroll all in operating expense, which is what I see often happens with a lot of businesses. And normally what stays in operating expense for payroll is the owner, because normally the owner is not necessarily generating sales all the time. Though I understand when you're small, you're probably still doing sales and being at the farmers market. And then admin costs, any assistance, support, operational costs that are not directly tied to delivering the product, but more running the business. Okay, I have a hand up on an admin. Forgot. Please unmute yourself. What was it? It wasn't Amy. It was hi.
Yeah, I was just curious if in your framework you're thinking at all about separating like variable and fixed costs, or if that plays in, I guess, specifically in the costs of products.
Yeah, great question. So for variable and fixed, I'm not going to do a split on that on the profit and loss statement, if that's what you're asking, like just in case folks are wondering. But I am going to consider it in my decision making, because when I decide to put a fixed cost onto my business, period, whatever that is, right? You're agreeing to pay for that no matter what. No matter if, again, this month you made no sales, you're still going to have to pay for that cost, versus a variable cost that is moving with revenue, for example, like, maybe direct labor, right? To produce the good, you need to be able to have direct labor costs, and therefore you're able to sell more products. So then it moves with revenue. But if maybe you didn't produce any product this month, your cost would be zero, but then your revenue might be also zero, right? So it moves with revenue, and it's variable because if the need is not there, you will not incur that cost, versus a fixed cost, you will have it no matter what. But we're not doing a specific tracking or split per se. We're just being mindful of, is this a fixed or is this a variable cost that I'm adding to my business? So yeah, great question. Okay, I have in the chat from Patrick, how to reflect farm planning as direct labor, or should we bother? We run a family farm and everyone chips in, sweat equity as direct labor. Okay, so Patrick, everybody pitches in, and you're wondering if you should be tracking everyone's effort. Is that what I'm understanding is your question?
Yes, 100%. Yeah. So we spend
Okay.
so much time, trying to get together and crop planning and charting out the year. And, this is a 122-year-old farm, but we're not profitable at this time. It's all about trying to juggle regular jobs and farm jobs and trying to carve out a way forward that will get to profitability. And we think that's through value added production. But in the meantime, we still got to grow cherries and apples and pumpkins and wheat.
Yep. Got it. So the planning time, I don't consider it direct labor because you're not actually producing product, but it is an important aspect of getting to profitability, right? So that's more of an overhead type of cost because it's more administrative or operational or strategic planning category. Because while it is very critical and important to prioritize, it has nothing to do with product being delivered, right? And maybe it is because you need the schedules and you need to know what seasonally you're going to plan and like do. Of course, you need to know that, but it's not going to impact production per se unless it's a key component of deciding what you're going to produce. So because you have the whole family kind of chipping in, tracking that seems like a lot of work. And the decision I always try to make is this going to help me make a better decision by knowing how much time we invest in planning? And if the answer is yes, then I want to track it. If the answer is no, let's just make it happen and not worry about the
It's
time
more
it
about
takes.
having cleaner books and trying to get
Oh,
to
well,
a clear picture of that
yeah.
profit percentage that you're talking about there. This aspect that I'm talking about there, where the planning done by there's 4 domiciles on this farm that are family, and everybody is contributing, but planning comes from grandma and my wife and
Yeah.
But trying to get that so that when we're attempting to clean up these books, that we can get to a clear picture so we can understand how better to set us up for success, understand what you're talking about, where be able to divine where we're allocating resources, whether mental or physical or
yeah.
It's that part of it. It's cleaner records.
Yeah. And that might not show up on your P&L unless that time that you're spending planning and strategically setting direction for the farm is a paid task for your family, right? It maybe eventually will be, but maybe right now it's not. And what you want to know is like, well, what does it take for us to plan and get to profit and be successful in this farming venture? And maybe the goal right now is not to track it yet, but as you get to devise a plan for profitability, you will want to start tracking, because what will happen is maybe you need to bring in someone to do that function, right? And then you want to know, okay, well, how many hours does it take us to plan as a family? How many people are involved? And if we were compensating per hour for this function, what would that look like from a cost perspective? Because then that would impact overhead costs and ultimately our profitability, assuming you can afford to do that at some point, right? And so I think you're a little ahead on where you want to be, but if tracking it makes you feel more in control of like knowing, oh man, this takes 10 hours of 4 people's time to make it happen, and maybe you want to get faster or better at it, or would this be a full-time role and you're trying to make those decisions, then yeah, you would want to know how much time and effort it goes into making this happen, even if it's not yet paid, because one day it will be.
Thank you.
Okay, yeah, no problem. I hope that helped. Okay, I'm gonna move this along because I know we have a lot to cover, and please keep dropping your questions. We'll get to all of them. And thank you for the segue, Patrick. Perfect timing to talk about bookkeeping. And so I bring up bookkeeping because I think oftentimes we think is that check the box, move on with our lives. We have to do it because we have to file taxes. It's a compliance item. But I'm here to tell you that bookkeeping is so much more critical to your success in your business and your profitability in the business and how you manage finances in the business. And the reason why is because clean records allow us to understand what is happening in our business day in and out. Every month, every quarter, every year, we need to be knowledgeable of what are our numbers. Like, did we grow revenue? Did we make profit? Did we spend too much in marketing? Did we spend too much in direct labor? How would you know unless you're tracking it, right? And making sure that your books are accounted for the right way in like every month, everything needs to be categorized, meaning in the right buckets. If it's a marketing expense, it needs to be marketing. If it's a direct labor cost, it needs to go into the direct labor cost. And making sure it's the right categories for every transaction that comes through your business. Now, ideally, by now, I'm assuming, and I want to make sure we're clear that you have separated your personal and business finances, as in the business has its own bank account because the business is its own entity. If you have not done that yet, I highly encourage you to do that to make sure you have clean records and that your bookkeeper doesn't have a nightmare of books to reconcile between personal expenses and business expenses. It just makes it a lot easier, and probably best for you to have separate records than your personal life, to only account for the right costs in your business. Now, the other piece of bookkeeping that I don't see often happens and maybe gets missed is that reconciling piece. What is reconciling? Essentially, we're looking at every bank transaction or your bank statement and every transaction that came through your accounting software, whatever your accounting software of choice is, and making sure those two match. Like if it's $3.24 for pens that you bought, that you got charged $3.24 for that transaction, that you did not get charged by accident double of that, or it's completely missing from your books because the transaction never came through your bank, or through your accounting feed, and making sure that that amount of money is equal to. Now, you're like, why would I care about $3.24 for pens? You probably don't, but would you care if your vendor charged you $324 for products and costs, and then you got invoice or charged a lot more than you should have, and then nobody caught that difference and wasn't able to ask for a refund for the difference? Those are the reasons why reconciling is important and what it should be done transaction by transaction, and making sure that everything is accounted for correctly. It's your job as a business owner to have clean books. I know everybody's like, oh, my accountant will catch it. My accountant will do the work. At tax time, they will look at 12 months of, 15,000 transactions and make sure everything is accounted for correctly. They will not. First of all, they don't have time. They have too many clients. It's not their job that your books are in order, just so you know. And by the way, they're signing the tax return alongside you. So guess who's responsible if an IRS audit happens? You are, because you said by signing a tax return that everything was accounted for correctly and that we are compliant and that my accountant's doing the job to do the filing, but you're on the hook ultimately for accuracy of your bookkeeping in your business. So with that being said, you want to make sure that you're doing it monthly. If you're doing it yourself, please, please, please learn a little bit of accounting. It will go a long way. It'll help you a lot in how you categorize things. Maybe you get some guidance from your accountant on the best way to map your chart of accounts. But if you are outsourcing it, make sure your bookkeeper knows accounting. It's important because you don't want just things categorized the wrong way in the wrong areas. And then later at tax time, your accountant is not very happy with you, complaining. Maybe they'll catch some mistakes and help you correct them. Maybe they won't, and they'll just file a tax return based on whatever you told them your books were. So there's that aspect of it. Now, the second piece, the more important reason why we want to keep books up to date is because we need to know what's happening. We need to be able to manage our business finances, and we can't do that if we don't have the right books in order. So you should be reviewing your numbers monthly. If this has not been the case before, just take 5 minutes every month, put it on your calendar, and just look at your profit and loss statement by month. Did it go up? Did it go down? These are the main categories: revenue, cost, expense, and profit. Are we negative profit? Are we negative low, less negative this month than we were last month? That's progress. That's a good thing, right? And start to kind of digest some of the things that have happened in your business. So a few questions to ask, what went up, what went down? Is it higher than last year? Did you make any profit? Did you spend more than you expected? In which categories? Are you seeing more spending than you thought you were doing? Because it's one thing what we think we are doing versus what's actually happening in your business is very different. So you might have said yes to a lot of things, and then you're like, ooh, I went over on 3 categories because I did not think about what my budget was for that, and I just kept saying yes to opportunity, and now here we are, and it's worse than you thought. So looking at it will give you awareness and start to help you control the future going forward, because you'll be able to make decisions from what is currently happening and where you're going. Okay, so on the chat I have, do you have good resources for learning basic accounting for business owners who are not doing it themselves? Yeah, great question. I don't have anything top of mind. I think there's a lot of really good content by CPAs or accountants that regularly post content on YouTube. I think one that I followed that's been really good is Hector Garcia, CPA. They're qualified, they know their stuff. They can talk accounting and love to teach that. So that's one resource. I think you could also, there might be some classes on QuickBooks online you can take around, accounting. You could also take an uncredited college course online, probably from a university, just accounting 101, some basics. Let's be honest, account is not anyone's favorite topic, probably, especially if you don't love numbers. So just making sure that you just know enough to know where things should be, where are the right buckets for things. And then you're asking questions from your bookkeeping team. If you have a bookkeeping team, ask them to explain to you, like, hey, I'm not sure this belongs here. This was, this type of expense. And they might not be aware, by the way. They might be guessing. They might be making assumptions to their best of knowledge. And it's your job to make sure that you're reviewing their work and saying, hey, that Home Depot charge was actually for something completely different than you think it was. We need to categorize it differently. So make sure that you're going through the books and reviewing their work if you have a team that is doing it, to ensure. Thank you for putting the links. Yeah, so he's one that I would recommend. Okay, I'll keep going through the chat. Also, don't assume that every accountant knows business accounting either. It's a crazy one. You want to hire an accountant that does taxes for business owners. Okay, so make sure you're looking for someone who knows what they're doing around business taxes. Don't just hire whoever, and make sure they have the right credentials and right background. Interview them, ask them questions. Not every accountant is the same, not every bookkeeper is the same, not every CFO out there is the same. So just make sure you do your due diligence on their credentials, expertise, and educational background and experience before you hire them, because they're the ones that are going to help you file compliance documents with the government. So you want to make sure you hire the right person. And if your person is not the right one, you can change them. You're not tied to your one accountant. Just don't try to look for one in March when the April deadline is coming up, or February when the March deadline is coming up, because you're not going to find one. So let's start looking now. Okay, so can you recommend best bookkeeping reconciliation software and human resources? So it's the accounting software. It's going to be a personal preference. I think it's the one you will do and manage every month if you're doing it yourself. Obviously, there's industry standard tools like QuickBooks. There's popular ones like Xero. There's all other kinds of software like FreshBooks, Waves, you name it. We want to make sure they have that reconciliation feature. That's what I would be looking for when doing bookkeeping, is to make sure that you can go through and reconcile your books transaction by transaction to ensure accuracy. That's what I look for in a resource. So the ones I've named are, some of the popular ones you can use to automate a lot of the bookkeeping task and save some time in doing the bookkeeping. But do not use the auto categorize because they'll just start to make decisions for you on things when they probably don't even know where things should go. And that could lead to some mistakes. So just make sure you're doing it manually as you go through. Yes, so thank you, Sam. Score Mentors is another great resource locally that you can access. They have a lot of really great resources. Okay, Christy sharing that she hired a CPA to help them set up a chart of accounts in QuickBooks and now enter the monthly numbers and have them do my taxes. Fantastic. So this is definitely where professionals can come in handy to help you just set it up the right way, and then maybe you can carry it forward. And then I would even ask that CPA if they would review it quarterly, or if they're going to be reviewing it at end of year, at least before tax deadlines come in. Okay, and then Sydney saying, yep, critical to get this right and get the right support. I couldn't agree more. Okay, and then, yeah, thanks, Christy. So for farmers who need specialized accounting, so someone who has worked with rural type businesses or farms before would be a great resource to have, because they kind of know what tax advantages or write-off or things that you normally do for farms. So try to look for someone who has some experience in those areas. It looks like Live Food Northwest has some workshops, trainings as well. Okay, I'm gonna keep going. I got asked a question by Eric on low-cost bookkeeping software that I would recommend for small businesses that also includes tax forms and payroll features. That's a hard one, because I think softwares that do things well do one thing well and not everything in one. Though I would say for bookkeeping, we normally use QuickBooks or Xero is the ones that we would recommend. They're not necessarily like the lowest cost, but they will have the functionality you need, especially when we get to a little bit more capital access and readiness. Having the financial statements is going to be critical. So having a software that can produce those for you is going to save you a lot of time. For payroll, we will recommend just a local payroll company that can do it for you. Or if you're going to do self-service, something like Gusto is able to grow with businesses, and it's a pretty affordable payroll processor. So if you're getting into that, QuickBooks can do payroll, it's just not our favorite tool for payroll, because again, they don't do more than accounting well. So I wouldn't recommend it for payroll, but we have some clients that use it for payroll. So it is available and you can use it if you're just getting started and need to have it all in one place. Okay. And we all love to hate QuickBooks, just so you all know. So, but it's just what we tend to use sometimes. Just don't do the self-employment version, because there's no way to get out of that afterwards. So that makes it a little bit harder. Make sure you use the essentials at least. And by the way, I don't sponsor or get paid by any of those companies to just provide my personal opinion. So like I'm not swaying anyone in any one direction. I think the software that you use is your choice, and making sure it can have the functionality and the abilities that you need to manage your business accounting. That's what's more important to me. So choose your one, try a few, see how you feel about it, and then ultimately, make your own decision. But just so you know, and I also just love to hate QuickBooks anyway. So like, just so you know. Okay, let's move on. Okay, I want to switch gears to cash flow management. So now that we know we have to keep our books, now that we know what a P&L is, now let's talk about this cash flow side of our business. This is the one that, by the way, most business owners don't pay attention to or don't manage until their bank account starts to scream at them. And then they're like, oh, what happened? Like, why are we out of money? And this is the one that you'll feel the most as a business owner, because you literally will have payroll due in 2 weeks and you won't have enough money to pay payroll, right? Like, that's just how normally it goes. Or you have someone who you're waiting to get paid from and they're late. And guess what? They're not going to pay you the day before your payroll is due. They're going to pay you probably a week later, because this is just how it normally happens. And it's really unfortunate, but that timing of when that cash flow shows up is so critical. And I want to make sure that we're talking about, how do we manage cash flow? How do we become aware and start to get in tune with what cash flow can do for our business? And it starts with tracking it. So no surprise here. We need to start looking at our numbers and see how much cash is showing up every week, every month in our business. I think people often think that sales equals cash, and that is not the case. So I'll give you an example. You made a sale to a wholesale account for $10,000, but your invoice that you sent to them is net 30 days. Guess what? They're not paying you today. They're going to pay you 30 days from now because they're going to try to use as much time as possible to hold on to their cash as a business and pay you on the last day possible they can before you actually take some kind of legal action against them. So they're going to use that 30 days that you gave them because guess what? You gave them 30 days net terms, but you could have done due upon delivery instead, where you actually get your cash the day you deliver product, but you chose to do net 30 days, right? For whatever reason. You're like, well, it's not a big deal. Like people do this. This is the industry standard. We're just going to go with it. And then you don't realize, oh, now I have payroll due, cost of goods that I need to probably pay for before I get paid from this, particular wholesale account I just made a sale for. And now you're sitting around for 30 days trying to cover all your costs. And maybe you have the cash, maybe you don't. And then finally at 30 days, that payment shows up, if not late, because, people forget. And if you're not reminding them every time the bill is due, they're probably not thinking about it because they have 200 other things to think about. So now you're out all this money that you're like, well, I thought I had $10,000. I just made $10,000 in sales. Where is that money? Well, you haven't collected it yet. So then until you have a process to collect and bring in that money in, you're on the hook for every bill that comes your way for the next 30 days. And so why this gets businesses into trouble is because they don't have the right timing when cash needs to be collected. So I always encourage businesses, the shorter you can make your time collection for cash, the better. I understand that sometimes industry standards get in the way. So like I'm aware, we know that, but you have to then properly plan for your cash flow if that's the case. So you made that $10,000 sale, the money came in, whew, we can breathe for a minute. And somehow we managed to make payroll before this, right? Now you got to figure out how you're going to make that $10,000 work for you for the next 30 days while you wait for your next 30-day invoice to arrive payment. Now, maybe they pay early and then in 15 days you have more money coming in, fantastic. But you don't get to control that time. You just get to control the process of collecting on that money, right? So that's why sometimes businesses get into debt and why sometimes they'll try to access lines of credit, credit cards, or anything that can help them close the gap between the time that they made the sale and the time they collected the cash. By the way, sometimes businesses never collect on those outstanding invoices. And I'm here to tell you that that is a very sad but it often happens that the business that you do business with maybe goes out of business, maybe they choose not to pay your invoice, maybe you have to follow up with them for 90 days before you actually see your money, or maybe you never see it and you have to write it off. So you have to just be careful and mindful that these are things that could happen. So you need to try to protect yourself the best you can. And then make sure that if you have access to debt or some kind of line of credit or any kind of working capital, that you're managing it to make sure it lasts through the time that you collect on the next sales. Now, ideally, you have more than one sale going on. So then you're seeing money come into the account every month. But how much money you bring into the account is also understanding how much money is flowing out of the account and when. So mapping out your bills by due date. When is this need to get paid? When is payroll due? What's the next thing I need to cover? It's going to be critical. And why we always advise the business have some kind of cash runway or cash cushion, meaning if you can save up 1 month of expenses in your bank account, and you can start with 1 week of expenses, right? Because this might be a big deal to save 3 to 6 months of expenses, but just start to think about how can I have some cash reserves in the business that if things don't get paid on time, I'm still not out of business, right? And I don't have to rush to the bank to get money, because when you need the money is when the bank doesn't want to give it to you. It's when you don't need it. They're like, yeah, go ahead. It's fine. Your business is profitable. You have cash flow in the bank. We're good. Here, take some money. You're growing. Fantastic. Let me fund that growth. But when you're like, I need to make payroll in 2 weeks and I don't have enough, they're like, yeah, I don't think so. Because if you have a hard time making payroll, that means you're going to have a hard time paying me back. So that's where we get into situations where, unless we're paying attention to cash flow will call your attention because your bank account will be like, hey, we don't have enough. And then you got to figure out what to do. Right. And I see often businesses get in this situation, unfortunately, because we weren't able to prepare ahead of time. Especially, with situations unexpected like COVID, where everything shut down. Like we did not know that was going to happen. But businesses that were prepared for the unexpected were more likely to survive through that period until help arrived. Right. And it's really the time that you can buy yourself to change or the course or direction of your business, because now you have the luxury of time on your side to make decisions and react and adjust and figure out what to do versus you're just out of money at that point. Okay. Let's see. Is there any questions? I see a lot of resources, so make sure you check those out. Perfect. I want to make sure I didn't miss any questions. Okay.
There's a
Awesome.
couple new questions at the very bottom of the chat,
great.
Carla.
Okay, so Alyssa, do you have recommendations for credit unions and banks offering higher than 5% CDs and variable rate money markets higher than 1.5% and business cards offering more than 2% cashback on unlimited expenditures? No, and if I did, I would tell you because these are actually good rates, and a 5% CD is actually starting to become less available. And I think as the economy, there might be some changes coming. You might see interest rates actually dropping, and if so, then those CD rates you were getting are not going to be 5% anymore. So just be ready for that. As far as like cash back on credit cards and other type of business cards or instruments, if you're getting 1.52% back, you're probably doing it right, because there's nothing higher that I've seen right now offer. Sometimes you'll get like some cards that will do 4x the points on a category, so like you can obviously take advantage of that. If you're not doing a cashback, maybe you have a miles credit card or something else. But yeah, in the answer is no, I don't have any others. That is kind of the best you can get right now for businesses. Yeah. And then I think you mentioned something about credit unions. Yeah, we love credit unions. I also long-term worry about how they can serve clients as they get bigger over time, because they're kind of limited or capped more than maybe bigger national branch banks, which I don't necessarily love, but they have access to more resources than small credit unions. So just something to be mindful of as your business grows. Where do you want to bank? I've also recommend clients have more than one business bank account, because banks sometimes fail, and banks sometimes like take time to release funds, and banks sometimes have issues, and you want to have a way to still be able to do business and not have to rush to the bank to go open a separate bank account. So like I'll sometimes have clients have a couple accounts. We've had situations you don't even want to know, where we couldn't make payroll, but literally they could go to the branch, withdraw money physically, and go deposit next door to the other branch to run payroll out of that second account because of circumstances beyond our control that happen. And so like always having options is good, because we want to diversify risk in any way we can in our businesses. So, okay, I know people have to drop because we're at almost the top of the hour. I'm happy to stay on to answer more questions as we go through. I'm going to close with budgeting and forecasting and make sure we get
Carla,
you out of here.
could you
Yeah.
quickly respond to ST's question, just maybe about cash flow versus accrual method?
Oh, thank you. Yeah, great question. So I would say you're not required to be accrual-based business from an accounting perspective until you're $25 million a year. And accrual tends to bring a whole nother set of complexities around accounting that if you don't have the right professional can really hurt your business. The other thing I'll say is often accrual doesn't really help you in the sense that if you're not accruing revenue as you're earning it, or when you make the sale, and also accruing the expenses that go alongside it, it's not going to benefit you. You're just going to end up paying more taxes on the revenue you're accruing. But if you're not accruing the expenses to offset it, it can get in the way. So just when you're making the decision, one, you should talk to your accountant. And then two, just know that it's not a requirement until down the road. So I don't necessarily advise businesses to add complexity earlier on when it's not necessary, unless there's a specific reason you're going after because your accountant advised you that that was right for you. Great question.
Thank you for answering that.
Okay. I'm going to wrap us up with budget, and then I'm happy to stay on so if people have questions. Okay. So financial planning, setting up goals for your business, and measuring performance against those goals is going to be the looking forward piece of what we do. And I find that often businesses are just looking at the present and past. And while that's fantastic to start, they need to proactively get in the driver's seat of their financial situation and start to think about the future, the next month, the next 3 months, the next 6 months, because when we intentionally plan, we're able to achieve more. Another thing is tax planning should not be left for tax time. Tax planning happens throughout the year, and paying those quarterly payments is going to make sure you don't get behind. I see way too many businesses trying to catch up their tax bill the year after because they spend all their profit and took all the cash out of the business, and now they're like, oh, we have this tax bill. Taxes should not be a surprise. So make sure you're planning for them. And then for forecasting, we want to make sure we're looking at that historical, but not saying that is the only thing that we can achieve. We can also grow the business and think about how do we want to grow the business? What do we want to achieve in the next 3 to 6 months, 12 months, 5 years, and start to map that out from both a revenue perspective and expense side, and start to map out what that needs to look like. We love to use percentages so that we can kind of assess where we want to be allocating, especially a profit percentage target, because when we're intentionally about planning for profit, we'll be most likely to hit it than when we just like let things happen. And then we use a lot of scenario planning when analyzing options before making decisions, because what happens is once you made a decision, you're dealing with the consequences of the decision. But when you've planned for 3 options of decisions you can make and options that you can decide on, now you're assessing the risk before you're committing to a solution. And then you know what the consequences might be before you make that decision. So it's important for you to start thinking about what are some of those options and scenarios I can plan from before I make that decision. And that's a lot of the work that we do to support clients in making better financial decisions in their business, and something you can start to do by just thinking about the options before you make a decision. Okay, and I know we have a lot of questions. So for those of you that have to run, thank you so much for being here. Want to be mindful of the time. I am here for another 30 minutes. If you guys want to stick around, those of you that have flexibility, I'm happy to answer more questions. And I see a lot in the chat, so I'm going to go to that now. Thank you if you were here and have to drop. I appreciate you being here. Okay. So by the way, I will disclose I'm not a CPA. Please check with your own accountant. They're the licensed person that knows your tax situation. They're the ones that should be giving you advice on your tax questions specifically for you and your business, because it's much more than your business. It includes your personal life, and I don't know your personal situation. I don't know your business in detail either to be able to advise you today, but I'm just giving you some general guidelines for you to consider. For tax planning, do you suggest setting up a separate bank account to set aside the money? So Hillary, great question. I think there's definitely 2 ways to do it. One is you have everything hits one bank account and you just know that part of that is earmarked to taxes. And then there's people who like physically need to have the money be out of sight, out of mind, so they don't spend it. So if you're the kind that will just spend everything that's in the bank account, I would highly encourage you a savings account or some other checking account where you can just start to move the money every month to set aside. You're like, this was never my money. Out of every sale I make, this percentage goes to taxes, even if it's not the full amount or even like a small amount. Set it aside. Forget that that was ever yours. That was always Uncle Sam's, and he's going to come knocking for it. It's just a matter of time. You're just holding it for them for now and maybe earning some interest in the meantime. But that was never yours, right? You knew you had to pay taxes. And when quarterlies come due, then you can just pull from that account and feel confident. I've seen that work really well for other clients. It does add another account to your bookkeeping. But, you know, I think if you're just doing monthly transfers, it's not going to be a big deal. So you can definitely do that. Okay. Hi, Andrea. Good to see you. Yeah, question. Sorry, did I hear someone? I want to make sure I didn't miss someone. Okay, let's see. Question: do you happen to have a list of tax professionals who specialize in small business taxes? I love any recommendations you might have. I have some local ones. I'll send you a note after. Just follow up with me. I can send you one or two. I'm actually working to compile a list right now because I know I was going to get asked this question every year at this time. I know I get asked this question. So I'm going to put a research list together. Once I have it ready, I'll make sure to send it to Sydney and Amy so they can share after of local accountants that, are currently taking clients, because the key is, are they taking clients? And that's the ones that you want, not just like any accountant, because they might not be able to take you on. So I'll get back to you on that. And if you find me on LinkedIn under my name, I made a post about who's available as an accountant take on clients. So make sure you search through my post, because I have already 2 or 3 people that said they were, and that are CPAs locally that are doing that work. So, okay. Alyssa, what are the drawbacks, penalties, and requirements to pay taxes annually versus quarterly? Great question. So year one, you are not necessarily required to pay quarterly taxes because it's the first year in business and you might not know how much you need to pay. We're not saying you shouldn't pay quarterly, but you get a pass from the IRS. They're like, it's okay, new business owner, you might not know how much to pay us. So we're going to tell you your tax bill at tax time. But then just know you'll have a big bill potentially. If you have profit, that means you're paying taxes. So there might be a bill you need to cover. Make sure you're saving during the year. Just because you're not paying quarterly doesn't mean you shouldn't be saving for it. And then the taxes can be paid annually for that first year in business. Second year in business, they're like, you've already done this once, you need to pay us quarterly because you know what it should be at least. And if it's not last year's amount, it'll be last year's amount plus 10%. Especially if your business is growing, it might even be higher. So like working with an accountant to calculate your quarterly estimated taxes is going to be important. So make sure you're doing that and that they're giving you guidance on what you should be paying quarterly. So I'm hearing some background noise. If you're not asking a question, please make sure to mute, and then we can, or raise your hand so we can call you in to answer your question.
So Carla, is there a penalty? Okay, so if
Oh,
you're
great question.
in year 3, 4, 5, and you're still doing annually, what are they penalizing?
Yeah, great question. So
quarterly.
You pay taxes on profit. So assuming you're profitable, let's say year 3, right? And you haven't paid quarterly, you can still make catch-up estimated payments throughout the year. So let's say you skip quarter 1 and you skip quarter 2 because oops, I didn't know, I forgot, whatever. Quarter 3, you can make a catch-up payment. You could also make a catch-up payment in January of the following year for the Q4. So I would say like check with your accountant what is the amount it should be for based on your profit. And then worst case, you could pay it at tax time. I don't know if you're actually getting penalized for not paying quarterly. That's a great question. I haven't had that come up before in the situations. We pay quarterly mostly for like all my clients about like keeping up. So I'm like, wait, is there a penalty? There might be some interest accrual, I imagine, because they expect that you like, like a paycheck, right? When you're an employee, like they took money out. So like, hey, well, you need to pay me my quarterlies. So there might be something like that, interest accrued on money owed. But I think your accountant should be able to tell you if there's anything outstanding, and they will disclose what the penalties and interests are if you're not paying. Now, if you get a big tax bill and you're like, I can't afford to do this from a cash flow perspective, like you spend money on product, whatever, right? The reasons, you could always ask to do a payment plan. The IRS is very reasonable. I know everybody's scared of them, but you can request a payment plan and pay in installments over time. I help a client that was 3 years back on taxes catch up. It was not fun. We were paying last like 2 years, current year and future year, like all at once. But from a cash flow perspective, we were able to afford to do that to catch them up. But they do payment plans, just so people know. You're not completely out of luck if you owe money to the IRS. Just make sure you don't ignore notices and that you're working with your accountant to communicate and comply with setting up those payment plans if you're not able to cash flow the full amount. Okay. Oh, someone wants me to go back a slide. Okay, so budgeting slide or cash flow management slide? Just want to make sure, Kirsten, if you're still with us. And if not, then
Thank you.
I can answer.
That
Oh
was
yeah,
it. You're
hi.
in the right
This one?
spot.
Okay. Yeah, I'll
Yeah,
I'll let
thanks.
you get caught up with that because I kind of
Okay.
went through fast. Okay, so some people had to run. Yay, great. I'm glad you guys found value. Okay. Bonnie, are you aware of an average or ideal target profit for small diversified veggie farms, I think, vegetable farms? I don't know about that particular type of farm specifically, but I say we try to target for product-based businesses a profit target between 10 and 15%. I think is pretty reasonable. If you're running earlier in your journey as a business owner, it might be lower. Just know the benchmarks are not applicable in all situations. That's what you want to get to. So if you're not there today, that's okay. You want to work towards making a plan to get to that. And it's in how you manage costs, how big is your business, because the more revenue, the more room you have really to make mistakes and errors or spend money because you just have more of it, right? But I think if you can look at your last year's performance and maybe current year to date performance, see what is your profit today. My thought is if you can make progress towards a higher profit every year until you get to kind of those benchmarks, then you're doing it right. It's not always, and maybe hitting the same profit this year than you did next year than you did this year might still be a good goal because your business might be growing. And when businesses grow and we're investing in growth, we're just going to have less room for profit because you're investing some of that money back into the business. So just know that too, that as you scale, there'll be need for more investment back into the business, which might leave a little bit less profit, right? But the goal is to always have some profit, no matter how small it is, and then over time kind of increase it as you go through your journey. So I hope that helps.
Excuse me, that was my question. I just have one follow-up. I
Please.
realized when you said profit percent, how do you calculate that? Is that different than gross margin? I realize I may not have the vocabulary. Can you just explain how you get
of
how
course.
those are equal?
So gross margin is a function of cost of goods sold. So that's kind of higher up in the P&L. So I mentioned take revenue, subtract cost of goods sold, and that number divide by revenue. That's your gross margin. Okay. So that's more the function of how lean you operate your business to create the sales based on like the direct costs that are tied to generating sales. The profit percentage, you want to take that profit number at the end. Like let's say, your business makes $50,000 and then there's $5,000 of profit left. You divide that by 50. So you divide the 5,000 of profit by 50 to get your profit percentage. So you kind of know what percentage you're running at as a percentage or function of revenue. So you take the profit that's 5,000 divided by the $50,000 that is your revenue for that month.
Okay. Net profit over total revenue.
Yes. Okay. Yes. Like the one that says net income in the profit and loss statement, the last line at the bottom, that's your profit. I know I should have explained this terminology. That is profit. People are like, what's net income? I'm like, profit. And then you divide it by, it might say revenue, or says income, or it might say, what was the other one? Total revenue, I think is the terminology that's used in the profit and loss. That number, like how much money you generated that month, right? And then you do that month and that's your percentage of profit.
Okay, thank you.
Yeah, no problem. Thanks for asking that clarifying question. Okay. Okay, wonderful. I've seen a lot of people. Yep. Thank you for dropping my LinkedIn. Feel free to follow. We post a lot of stuff there. Awesome. Okay. I don't know if we have any more questions, but here's my contact info where you can find us. Thank you for having me today. We love to educate and empower with knowledge. So make sure to follow us on social media for more educational content, free to access, share with other business owners you think might benefit from that. And we really thoroughly enjoy doing this educational webinars because I think a lot of business owners should have access to this knowledge so they can have thriving businesses for the long term that create jobs and impact the world in a positive way. So thank you for having me. Really appreciate it. And I'm going to turn it back to Sydney to close this up.
Thank you so much, Carla. And thank you everyone for being here today. I'm so glad that this was a lively and question-filled chat and session. I think that's really great. This workshop was sponsored by the Northwest Rocky Mountain Regional Food Business Center, which is Amy and I. Just as a reminder, I will follow up with an email that includes all the links that we've found in the chat. You will have access to the chat, the recording, the transcript, a magical AI summary as well, because some of us like magical AI summaries, links to Carla's LinkedIn and to Wealth and Worth Within as well as where you can go at the Northwest Rocky Mountain Regional Food Business Center to sign up for the newsletter, and where you can go to understand what other offerings the center has, because some of them may apply to you as well. And other than that, unless there's some last minute questions, we'll say goodbye and move on. Any last minutes? All right. Thanks, everyone. Until next time.
Thank you all so much.
Thank you so much, Tyler.
Thank you, Carla.
Thank
This
you.
was so informative. Really appreciate your insights shared.
Thank you so much for being here, and I
you.
appreciate everyone who showed up.